Global Monetary Watch, July 20th. Today we're taking a careful look at the latest developments surrounding Iraq's financial system and the growing attention focused on the country's monetary policies as August approaches. Over the past several weeks, a series of official actions and public statements have encouraged analysts and market observers to examine Iraq's banking reforms more closely. Rather than relying on online speculation or unverified claims, this discussion focuses on publicly available information and the broader economic context. While no single announcement tells the entire story, the combination of recent developments has made this an important period for anyone following Iraq's financial landscape and the progress of its long-term economic reforms. One of the clearest themes emerging from recent updates is the Central Bank of Iraq's continued effort to strengthen oversight of the country's currency market. Officials have repeatedly emphasized the importance of narrowing the difference between the official exchange rate and the rate seen in the parallel market. This objective is more than a technical adjustment. A large gap between the two rates can create uncertainty, encourage unofficial currency trading, and weaken confidence in formal financial institutions. By reducing that gap, the central bank aims to reinforce stability and improve trust in Iraq's official banking system through measured policy implementation rather than sudden or unexpected action. These efforts have not appeared overnight. They are part of a broader strategy that has unfolded over many months through regulatory changes, banking reforms, and increased monitoring of financial transactions. Recent measures affecting currency exchanges and banking compliance suggest that authorities remain focused on improving transparency throughout the financial sector. Such reforms are often gradual because they require cooperation between commercial banks, government institutions, and international financial partners. Although progress may seem slow to outside observers, gradual implementation is common when countries work toward strengthening monetary systems while maintaining financial stability. Many discussions surrounding the Iraqi dinar tend to focus almost entirely on the exchange rate itself. However, economists often pay equal attention to the policies supporting that number. Exchange rates are influenced by a combination of monetary management, foreign reserves, banking reforms, inflation control, and fiscal discipline. Looking at only one figure without considering the broader economic environment can lead to an incomplete understanding of what is happening. Recent developments suggest that Iraqi authorities are concentrating on improving the structural foundations of the financial system, which many analysts consider an essential component of long-term economic modernization. A useful historical comparison comes from the changes implemented several years ago when Iraq adjusted its official exchange rate after an extended period of preparation. Before that policy shift occurred, there were months of discussions involving economic planning, government coordination, and consultations with international financial organizations. The process demonstrated that significant monetary decisions are typically preceded by extensive groundwork rather than being introduced without warning. While today's circumstances are different and should not be viewed as repeating past events, the emphasis on preparation remains an important feature of how central banks generally operate when managing national currencies. Another important area receiving attention is Iraq's broader economic reform agenda. The government has continued promoting policies designed to diversify the economy beyond its traditional dependence on oil revenues. These reforms include strengthening public financial management, encouraging private sector development, modernizing banking services, and expanding non-oil sources of government income. Achieving these goals is a complex undertaking that requires years of sustained effort. Progress has not always been uniform, and officials continue to acknowledge ongoing challenges, including administrative inefficiencies and corruption. Nevertheless, reform initiatives remain an important element of Iraq's long-term economic planning. Modernizing Iraq's banking sector has also become a significant priority. Over recent years, efforts have focused on improving compliance standards, enhancing transparency, and reconnecting Iraqi financial institutions with international banking networks. These steps are particularly important because stronger relationships with foreign correspondent banks can facilitate international trade, improve financial transactions, and increase confidence among global institutions. Banking modernization is often less visible than headline economic announcements, yet many experts consider it one of the most critical foundations for building a resilient financial system capable of supporting sustainable economic growth. International cooperation continues to play a role in Iraq's economic development. The country has maintained ongoing dialogue with organizations such as the International Monetary Fund, which regularly provides technical assistance and policy recommendations to member nations. These consultations do not determine Iraq's decisions directly, but they often provide guidance on financial stability, fiscal management, and monetary policy. Continued engagement with international institutions can also strengthen confidence among investors, governments, and financial markets by demonstrating that reforms are being evaluated within internationally recognized economic frameworks. Energy revenues remain closely connected to Iraq's overall financial position. As one of the world's major oil producers, Iraq relies heavily on petroleum exports to fund government spending and support public services. Stable oil prices can provide policymakers with greater flexibility when implementing reforms because stronger revenue reduces immediate fiscal pressure. Conversely, periods of declining energy prices may require governments to adjust spending priorities. Current market conditions have generally provided Iraq with a more stable fiscal environment than during previous periods of severe oil price volatility, allowing authorities to continue focusing on longer-term economic objectives. Global economic conditions also influence Iraq's monetary strategy. Around the world, central banks continue monitoring inflation, interest rates, currency movements, and changing patterns in international trade. Discussions surrounding reserve currencies, sovereign debt, and cross-border commerce have become increasingly important in recent years. Iraq, like many countries, must consider these broader international developments when managing its own financial policies. Strong foreign currency reserves and careful reserve management provide policymakers with additional flexibility during periods of global uncertainty, helping the country respond more effectively to changing international economic conditions while maintaining domestic financial stability. The modernization of Iraq's banking infrastructure has become one of the most closely watched elements of the country's broader economic transformation. While public attention often centers on exchange rates, financial experts frequently point to the banking system as the foundation of any lasting monetary reform. Recent initiatives have focused on upgrading payment systems, strengthening digital banking capabilities, improving regulatory oversight, and ensuring that commercial banks operate according to internationally recognized standards. These developments may not receive widespread media coverage, but they represent essential steps toward creating a financial environment that is more transparent, efficient, and capable of supporting long-term economic growth. Another area drawing increased attention is Iraq's effort to improve compliance throughout its financial sector. Regulatory authorities have continued implementing measures designed to strengthen anti-money laundering procedures, enhance customer verification requirements, and improve oversight of financial transactions. These reforms are intended to increase confidence among international banking partners while reducing opportunities for unauthorized financial activity. Building a stronger compliance framework is a gradual process requiring cooperation between regulators, commercial banks, and government agencies, but it remains one of the key priorities identified by officials working to modernize Iraq's financial institutions. The role of technology in Iraq's banking reforms should not be overlooked. Digital payment platforms, electronic transaction systems, and modern financial technologies have become increasingly important as the country seeks to reduce reliance on cash-based transactions. Expanding access to secure electronic banking services can improve efficiency, strengthen financial inclusion, and provide businesses with more reliable methods of conducting transactions. Many governments around the world have pursued similar modernization strategies, recognizing that digital financial infrastructure supports economic development while improving transparency across the broader financial system. Small and medium-sized businesses also stand to benefit from a stronger banking sector. Improved access to financing, more reliable payment systems, and greater confidence in financial institutions can encourage entrepreneurship and private sector expansion. Iraqi officials have repeatedly emphasized the importance of supporting business development beyond the country's traditional oil industry. While these objectives require continued investment and policy coordination, expanding opportunities for private enterprise remains an important component of Iraq's long-term economic planning and broader diversification strategy. At the same time, policymakers continue working to balance economic reform with financial stability. Significant changes within a national financial system require careful implementation because sudden adjustments can create uncertainty for businesses and consumers. Central banks around the world generally favor gradual policy changes that allow financial institutions sufficient time to adapt. Iraq's approach appears consistent with this broader principle, emphasizing measured progress supported by ongoing evaluation rather than rapid shifts that could introduce unnecessary volatility into the financial system. International investors and financial institutions continue monitoring Iraq's economic indicators with interest. Factors such as foreign exchange reserves, inflation trends, government revenue, banking sector performance, and fiscal management all contribute to assessments of the country's financial outlook. These indicators provide a more comprehensive picture than exchange rates alone, allowing analysts to evaluate broader economic conditions. As reforms continue, observers will likely remain focused on how these measurable indicators evolve over time and whether they reflect sustained improvements in financial stability. Oil revenue continues to provide an important source of fiscal support for Iraq, but government officials have consistently emphasized the need to prepare for a future in which economic growth depends on multiple sectors rather than energy exports alone. Investments in transportation, infrastructure, manufacturing, agriculture, and technology are intended to strengthen the country's economic resilience. Diversification is widely recognized as a long-term objective requiring years of consistent policy implementation, but progress in these areas may gradually reduce the economy's vulnerability to fluctuations in global oil markets. Another important consideration is public confidence. Successful financial reforms often depend not only on regulatory changes but also on the willingness of businesses and citizens to participate in the formal banking system. Expanding banking services, improving customer access, and increasing confidence in financial institutions all contribute to broader economic development. When individuals and businesses rely more heavily on regulated financial services, policymakers gain additional tools for supporting monetary stability and encouraging sustainable economic activity throughout the country. As August approaches, attention will naturally remain focused on official communications issued by the Central Bank of Iraq and other government institutions. Market participants, economists, and observers will continue evaluating new information as it becomes available. However, it is important to remember that meaningful policy developments are typically communicated through official channels and supported by formal documentation. Separating verified information from speculation remains essential for anyone seeking to understand Iraq's evolving financial landscape objectively and responsibly. Ultimately, the recent developments discussed throughout today's analysis highlight a broader story of institutional reform rather than a single defining event. Iraq continues working toward stronger financial governance, greater banking sector modernization, enhanced international cooperation, and improved economic resilience. While challenges remain and progress is likely to continue gradually, the ongoing reforms provide valuable insight into the country's long-term economic direction. Here at Global Monetary Watch, our goal is to follow these developments carefully, present verified information with appropriate context, and help viewers stay informed through balanced, fact-based reporting. If you found today's update helpful, consider subscribing and enabling notifications so you never miss future coverage of official developments from Iraq's financial sector. Until next time, thank you for watching Global Monetary Watch.